Hey guys, I am Joe Chavarria. Welcome back to another exciting episode of Cup of Joe. Today joining me is the very talented, very passionate, very successful mortgage loan officer, Samantha Cavazos. Samantha, thank you so much for dropping by.
Thank you for having me, Joe.
Awesome. Well, Samantha, in my company, we do a lot of business together. We work specifically with first-time home buyers, even second chance buyers, a lot of first-time home buyers who are undereducated about the home buying process, maybe a little intimidated by it, and maybe due to credit or finances or questions they have. And our job collectively is to make it super easy, very fun, and make sure that it's less intimidating and overall a great experience. So I bring her in today so we can kind of share a little bit about what's going on in the market, what's going on out there, what's new, what to look out for, just so we can continue to educate our buyers. So a couple of things that I want to talk about is, first and foremost, first topic I want to talk about is just how you're able to do some things. Sometimes I call it magic.
Right.
You're able to do some magic to help a buyer, whether it's moving some balances around or doing something related to their credit to get them 10, 20, sometimes 50 points or more in their credit score, where a bank or maybe a non-specialized mortgage lender or mortgage company may, just turn that person down.
Right.
And that person may believe that it's never possible for them.
Right.
So I want to talk about, what you do, how you do that, and what are some things that you can recommend or some things that you just kind of cover to raise someone's credit score. But first, before we get into that, I do want to thank our partners at Identity IQ. So if you're currently monitoring your credit report through Credit Karma, you're missing out big time. Identity IQ provides you with a full detailed consumer report from all three credit bureaus, not like two like Credit Karma does, which they're just missing Experian. They only provide you with Equifax and TransUnion. But if you're looking to monitor your credit, you're looking to repair your credit, you want to know exactly what's going on with your credit, check out our friends at Identity IQ. They also provide you with a $1 million identity theft protection plan, dark web and internet monitoring, and an enhanced 3-bureau credit report monthly. The service is great. I use it. Our clients use it. It's a great tool to use to monitor your credit, repair your credit, because it provides you a lot more data compared to Credit Karma. So for a limited time, our listeners get 35% off their secured max plan and even get a 7-day trial for just $1. So go to all3scores.com to learn more. That's 8LL, the number 3. Scores.com to learn more and take advantage of the trial and the discounted price. Again, go to all3scores.com. That's 8L, the number 3, scores.com to get more information and to get started. All right, so Samantha, first topic is, so how do you decipher who really needs full-blown credit repair and or how do you just implement your magic? Give me an idea how you do that.
So basically, I have a client apply online, just normal. And once the client applies online, the company actually offers what's called Rapid Rescore.
Okay.
And Rapid Rescore is a tool for clients to be able to take advantage of the maximum potential credit score that they could have.
Okay.
So let's just say, for instance, a client had a 600 credit score. Well, once they apply online, the system will spit out, this client could have a 660 if they do X, Y, Z. Okay. Sometimes that may consist of something super simple, like they have a Capital One credit card with a balance of 500 and it's at 450. So it's almost maxed out. So the way that the credit bureau see it is that the utilization of that specific credit card has been maxed out. So what that Rapid Rescore tool will tell me is pay that credit card down to $50, and I share that information with the client, and the client can pay down that credit card to $50. Once that client is done paying down that credit card, I do what's called Rapid Rescore, where it's free to the client. The company actually pays for it, and I expedite their credit score, and I can actually increase it in 5 business days.
Wow.
Yeah.
And that's amazing because, being a credit expert, I would consider myself to be that, we advise our clients on, doing things similar. The catch is we have to wait for the reporting cycle, or we have to wait for the credit card companies report the balance, and typically that's usually once a month. So what would be the difference between doing that versus?
So, I mean, I'd like to give a scenario because I literally just closed someone with the same scenario. So they went to a larger bank. The bank does not have rapid rescore. So they could not get financing anywhere. I mean, they had tried at several different types of banks. You have to find a mortgage company that actually offers the rapid rescore tool, and where they couldn't have bought a house or they'd have to wait till that next cycle date for it to be reported. The client came to me. I told them, do this, this, and this. Right. They did it immediately. And in 5 business days, I was able to get them approved for their home loan and close like the very next month. I mean, they went under contract in the middle of the rapid rescore. Wow. So that's kind of the difference of, going to the larger banks or waiting till the cycle. I mean, rapid rescore is something that happens immediately. It takes 5 business days for your scores to increase.
Here's my experience of what I've noticed, and then you can, chime in on this is, rapid rescore, I believe it's been around for a while. How long do you think it's been around?
Oh man, since I started, and that was like maybe 7-8 years ago. So it's been around for quite some time.
So let's just say at least double that. Let's just say at least 50.
Right.
It still surprises me that a lot of people still don't know about it.
I know.
Like we'll have we get referrals from clients who come on our website and I want to buy a house, and we see their scores and they're like, kind of borderline.
Right.
And then like, all you gotta do is pay on the down payments, and you'll be good. Did your lender talk about that, or mention about rapid rescore, or what's that?
Well, sometimes the lender doesn't even know that even exists.
Right. Well, what do you think that is? My theory is that the bank or the investor behind the scenes doesn't really want to.
They don't want it. They don't want that. They want the, square in the box type of clients, where for us, we want those clients, but we're also open to helping the ones that need that assistance. And this client would have not been able to get a loan anywhere. So at the end of the day, everybody's winning. They got their house. We got a loan. We were able to help them. And so I know like the larger banks don't want to invest. It's expensive, but it's free.
I hear it's like $35.
It's 35 per bureau per credit card. Okay. So like if it's a Capital One credit card and I need to update it with Equifax and TransUnion, well, there you go. That's 35 and 35. Right. So it can be expensive because it's not always just one credit card. Yeah. But I mean, at the end of the day, it's something so simple. Right. And that's why you have to find a company that offers it. And for me, I mean, I can't even tell you how many deals I've been able to save by offering rapid rescore.
My opinion would be, and I get the cost part of it.
Right.
And so, as maybe the owner of that mortgage company, you don't want to, spend money on this because it still may not pan out or whatever. My theory behind it is, this is it's a rate competitive business, but how you beat rate and how you beat your competition is to be a great servicer.
And being different.
Right. So it's almost in your interest. You get somebody there that just with a few, moves, a few adjustments there, they could be a client of yours, they can be a borrower. And if you just go that extra mile, you have yourself a customer. Here's the flip side. If you don't help that person now, one or two things are going to happen. And usually it's probably the first part.
Right.
They're going to think their chances of buying are like useless.
Yep.
Never. It's never going to happen. I had a realtor come in one point, sit down with me, and was talking about a story that kind of the reason why he believes in helping this demographic is because his mother growing up, they grew up in Brownsville or somewhere down south, and they went to the builder. The builder basically said, no, can't help you, good luck kind of thing, versus like, okay, if we do this, this, and this, and maybe you do a little bit of this, come back and see me in 3 months or 6 months, like giving them a little bit of hope and an action plan. Because she did not receive that, she had it in her mind that I'm never going to buy, we're never going to own a house, it's just not for us. Not everybody thinks like that, but I think that it does. Into your psyche.
No, it definitely does.
You get told no, you get declined, you get demotivated, moon burst, and for some people it's just like never again.
It's almost like the impossible, but that's funny that you say that, because the clients that I do rapid rescore, I mean, they didn't even know that this existed. And so the fact that I'm even able to offer it, it's not only does it like make the realtor beyond happy, because they're like, man, that's crazy that they've gone to 2 other lenders. It helps my business, and it also makes a family happy. They didn't think that there was any hope, and Rapid Rescore is an awesome tool.
That's awesome. How did you find out about it?
My company offers it. So my company, explains what products we have. And from there, I take those tools and I share it with whoever, I think can benefit from it.
Awesome. Well, I believe that, in order to be a great loan officer, you have to be hungry. You have to be humble, and you got to be smart. You got to keep up with the products that are coming out, the products that are out there. You got to be, you got to eat, breathe, sleep, mortgage.
Right.
You know all about that. But I hear from time to time, it's tough. Loan officers don't make it. A lot of them kind of either maybe become a realtor or just go back to corporate America because it's not for everybody. It's tough. What do you think it takes to be a great loan officer?
Honestly, your mindset. Like, I've always been the type of person that failure was never an option. So like, I can't even go into something knowing that I won't succeed in it. So it's really your mindset. I mean, if you want something, go and get it. That's always been my mindset. And so I think that like giving up has never been an option in any aspect of my life. And I mean, to me, this career is so rewarding. Not only is it rewarding to me, but it's also rewarding to the people that I'm able to help. And so,
you say that fuels your tank with
it does.
You make the impossible.
Possible. I mean, yeah, it really does. It makes me happy when I have a good month. It makes me happy to help someone that didn't think they could get helped. But yeah, I mean, being a good loan officer, I mean, you have to stay on top of it. You have to provide good customer service, and all of that, all of those things are extremely important to me. Yeah.
What are some, tips or recommendations you would say to maybe a loan officer listening in, like, hey, I want to be a loan officer, or I want to turn my business up.
Right.
What are some tips you would throw out there for them?
I mean, just go and get it. Put yourself out there, make yourself uncomfortable. I mean, I put myself in uncomfortable positions all the time, but that's the only way to better yourself. I mean, success is uncomfortable. And when I first started, I was cold calling realtors. I was actually hanging out with a realtor yesterday, and I was like, it's so funny because now that realtor and I are like really good friends. And when I first called him, I was like, hey, I'm a loan officer. Can you meet for coffee? He was like, I'm not interested. And I kept calling, and now I do all his business. Now I do his friend's business that, I'm doing his loan right now. It's just, it's persistency. I mean, making yourself uncomfortable, but knowing that there's a result at the end of the day. I mean, you don't, when you want to pass a test, you have to study. You have to study. You have to do what you need to do to pass a test. And if you want to succeed at something, in my opinion, you have to do everything that you can to make sure that you're not going to fail.
So be determined.
Go out there. Social media marketing.
Talk about that a little bit.
I mean,
I like your posts.
Yeah, social media marketing. I can't even tell you how many people have reached out to me just from, I post examples. I post examples of things that maybe a realtor wouldn't, the larger banks, Chase, Bank of America, all of them, they know those banks exist. They're super popular, but do they know that you exist? Right. And so, posting examples and different stories and scenarios, that really helps me. I use social media platform a lot, and I have people reach out to me that, they see my post and they're like, hey, I'm in that same situation. Can you help me? So I use social media a lot.
You bring up Chase and you bring up the big banks.
Right.
And I think, maybe about half or, most people out there kind of get an idea of what the difference between the two, between going to Chase Bank or Bank of America or Wells Fargo for mortgage compared to going to you. I still think there is some kind of confusion of what's the difference? What do you do?
That's a good question. I really like that question. So, I mean, the larger banks, don't get me wrong, they're good. They cater to a certain type of clientele. They have amazing programs for clients that maybe I can't even touch. Maybe I can. I don't know. Give me the opportunity. But
that's hunger, folks.
Yeah.
That's hunger.
Chase and all those larger banks, they have they want the A+ clients. And for us, like I said, we want the A+ clients, but we go as low as a 580 credit score where the larger banks won't even touch those. We have Rapid Rescore. The larger banks won't even give these clients any type of recommendations. I mean, they'll straight up tell these clients you don't approve, and these clients don't have a clue where to start. Yeah. With us, I get those clients that they have a 500 credit score and they're not even ready for me. Right. But in my mind, I'm saying, well, you know what? They're not ready right now, but a year from now, they will be. And they're going to call somebody when they are ready. And I'm not going to miss out on that.
Right.
And so the larger,
making sure you have your
it's pipeline. My pipeline. Yeah. And so I think with the larger banks, you know, I'm not saying that all of them are this way, but I truly try to cater. It's not just a loan to me. It's not just a paycheck to me. It really means that, hey, I really genuinely want to help you. Yeah. And the larger banks, I mean, they get leads through their website. Right. They don't have to go find these types of clients. I mean, the clients are literally coming to them. Right. And for me, I have to put myself out there. I don't have a lead generation system. I am my lead generation. So what I do is every single client that I touch, I make sure that they have a step-by-step guide on exactly what they need to do. Yeah. Exactly what they need to do so that when they're ready, or, you know, my follow-up game, I'm right there. A year later, hey, I remember I told you a year ago, and I don't feel like the larger banks offer that. Right. And the other thing is that we have our set, like we have a processor. My processor works only with me. And for someone that doesn't know the process, that may not be important. Right. But for a loan officer to have a set processor, a set underwriter, a set team, it's everything.
Almost like specializing in that and only that in mortgages.
It's only that. I mean,
in banks, they have like, you know, they have quotas, they have
corporate underwriters. You don't know who's going to be a
credit card, sell loan, you need checking account, savings account, business account, you got to do mortgages. Right?
They don't know who their underwriter is going to be. The loan officer can't get in touch with them. They're missing closing. For us, I can literally pick up the phone and call my underwriter. Hey, what's going on with this file? And that to me is so important. I need to have my hands on my clients.
Would you say that's lacking on the corporate side, on the banking side?
It's definitely lacking.
Get that touch.
It is. Yep.
Yeah. I hear that the banks offer, you know, very competitive rates, but it's kind of like, well, you can get to that point. Yeah. Good luck.
If you can close on time, that I just closed someone last week, a 12-day closing. She originally started at a large bank, slam dunk file. The loan officer stopped answering her call. What? And I said, well, where is the loan officer? She said, in Washington.
Doing what?
I'm like,
well, like
how do you know that loan officer is not on vacation? Yeah. So, I mean, I closed her in 12 days, went to her closing. It was a picture that I posted on Instagram. And I mean, it's like, sometimes it's not about that better rate because the client had told me, I sent my documents over and over the same documents. And it's like, when you're buying a house, not only is that extremely stressful, you're putting thousands of your own hardworking dollars. Right. It's not about the best rate. Sometimes it is. You want to get the best rate, but you also want to get the best customer service. Right. And for her, it wasn't about the best rate. It was like, who can just get me to the finish line?
Yeah, we're seeing more of that. More of the general population is, you know, it's kind of divided. Right. Maybe half care a lot about the rate. The other half just like care about time.
Yeah. Or maybe a mixture of both. Right. You know, it's like, look, the rate, you know, these online lenders, I mean, you don't know who that person is. Your realtor doesn't know who that person is. And not only that, sometimes these deals bust. Yeah. And you're calling me and it's now I'm rushed to the finish line. There's a whole seller on the other side of the table. Like, I mean, there's a clock ticking behind all of this. It's stressful, you know?
What's your workload like? Seems like you work 24 hours a day.
Oh my gosh. I do. I work a lot. And it's hard because I'm also a mom outside of this, but it's hard. It's I wake up in the morning, like this morning, I woke up at 7. The kids are getting ready. I'm on the computer. I drop them off. I come home, work, and then sometimes I work around the clock. I just have to be available. And I am. Sometimes my clients get off at 5. I have to, you know, make sure that they can get a hold of me. And that's another thing with the larger banks. Yeah. It's the weekend. Your loan officer is not going to answer the phone. Right. Call me on the weekends. I'm right there. I'll answer.
Some people are like looking at houses.
I'm telling people I'm working on the weekends. Give me your people. So.
It's awesome.
Yeah.
Well, I do want to touch on this new ruling by the government that's now, by Fannie Mae, Freddie Mac, the FHFA, allowing VantageScore to enter into the mortgage market. Mm-hmm. So, you know, that's supposed to take effect within about 2, 3, maybe 4 months. It says 60 days from the announcement. It wasn't too clear. Was that the announcement or
right?
Announcement? So not exactly sure, but it's coming. And so I want to touch on that. It's really tough to predict what's going to happen with this, but definitely want to kind of get your insight, and I'll share my 2 cents with that. But first, what I want to do is I want to thank our friends over at getsecuredcards.com. So if you're new to credit, or even if you wrecked your credit years back, getting back on track can be rather difficult, especially when the big banks don't want to approve you. Even if you were looking to get a secured card at Wells Fargo or Chase, many of those require credit checks and still have the tendency to deny someone for a secured card. Never understood why that is, but our friends at getsecuredcards.com can help get your credit back on track, help you get the credit card that you need and that you deserve. A lot of credit builder accounts like secured cards from Open Sky, First Progress. You can pick the card that best suits your budget and your life. So to get some more information on that, go to getsecuredcards.com and start rebuilding your credit with a secured credit card. Also, they have several different unsecured options like credit builders, such as an online jewelries club, some credit cards for someone who's a student and is new to credit. So there's some other options there besides secured cards. It's a great place to get get some accounts, some trade lines to report to your credit and start building credit. So again, go to getsecuredcards.com to explore your many options and start building credit. All right, I want to talk about Vantage scoring versus FICO Classic. So in the mortgage business, most mortgage lenders are using FICO Classic, right. FICO version 2 for Experian, which came out, I think, in 98 or 2004, one of those, I think 2004. And then TransUnion and Equifax, version 4, version 5. So older versions of FICO, they've been around for quite some time, and I can see why.
Right.
If something's working and risk is mitigated, and why expose yourself to more risk, right? Especially with what happened in 2008. So now Vantage has been fighting hard to say, hey, look, FICO is a monopoly. People don't really have a choice of what scoring model to use. We want to be a competitor. We want to offer, users a choice, customers a choice. Their customers, right. Maybe the banks and anyone who's going to use the model. But they want to compete, and they're playing this whole FICO as a monopoly. We want to compete and offer a better chance. Now, my experience, Vantage, and just so that our listeners know what Vantage is and where you find Vantage. Vantage is typically found online. So Credit Karma is probably a big reseller or a big user of Vantage scoring.
Got it.
They use Vantage, the latest versions 4.0, and they're using Vantage 4.0. And most online scoring models use, or online credit monitoring companies use a Vantage score model. Typically, and I guess this is kind of where, you can kind of chime in, and our experience has been an online score, which is typically going to be a Vantage score. I guess what we have noticed, it can be between 10, sometimes 50 points different. And it could be higher, it could be lower. What do you notice typically with like an online score compared to?
It's so off. I mean, the way that I tell my clients, because they're like, well, I had a 680 credit score on the online apps, and then they apply and they actually have like a 590.
Yeah.
I tell them, take it with a grain of salt. It's not the same, because obviously we're pulling the FICO score. Right. It's not the same. Right. If you see your score at a 590, maybe I can do a rapid rescore to try to get you to the 600s. That's my first, step. My second step is if it's way off, which most of the time it is, 10 to 50 points, I'll tell them, when you see it go up on those online apps, I know it went up on my side. Right. So let me know, monitor those online apps. They're good for a certain, that type of purpose. Like, they're good to see if your scores go up. But they're off. They are off. It's a hit or miss for sure.
Happens. We're not too sure what's going to happen. I still believe that mortgage companies and investors have to, it's got to be their willingness to say, hey, okay, let me try Vantage, right? Let me give Vantage a try. The thing is, they can't kind of have both, right? That's from my understanding.
Right. You have to choose one or the other.
You got to stick with FICO or you got to stick with Vantage. You can't have both and say, okay, let's try you with this one, decline. Okay, let's run into Vantage, approval. It doesn't seem like that's going to be allowed. So what concerns me is going to be, what probably concerns a lot of investors is going to be, if I switch to Vantage, would I see more approvals? And these approvals that I would see, are they legit? Are they real? How do I know my risk is still going to be low? Those are some unknown variables. And I think Vantage has their work cut out because they have to, now that they're allowed to compete, now it's going to be the job of them convincing that, hey, we are a safer version, we're a safer model than FICO. You can get more approvals, and it's going to be still less risk. That's their job to convince them of that. Also, FICO has industry options. So industry options are like, say that you are going to a car dealership and you see your FICO credit scores online. Okay, or let's say you get your credit score, your FICO score from a mortgage lender. Right. Well, there's an industry option that's applied based on the industry that you're seeking credit for. So, for example, if you're trying to get an auto loan, there's going to be we call it a filter or call it an enhancer or a de-enhancer, one of those, that is going to tailor your score and your report based on your ability to repay that type of debt. So like an auto lender may score someone more critically if they had late payments on auto in the past. Right. Late payments on, or had a repossession in the past. Right. Maybe with their mortgage score, maybe mortgage score is like 680, but they go get their auto score, maybe it's like 590 because of all the auto. I almost think that that's actually a really good idea. Yeah. Like there's compensating factors, like if you have a 590 and you're trying to buy a car, but you've had a car previously and you see that maybe that's the only debt you have. And so what I like to call it is your score is stuck. Like there's not a lot reporting to the credit bureau. So it's stuck. It doesn't necessarily mean that you're not responsible, but I feel like if that does happen, I think that's an amazing idea, because I feel like if they could just look at their previous history, if they did have a car loan and they see like, oh, wow, this person has been on time. I mean, why should they not get a car? Yeah. They're not like a irresponsible person. There may be medical bills that the mortgage world doesn't even care about, but it does affect your score. Right. So, and that's why the industry option, and FICO is the only one right now that has the industry option applicable to the scores. Vantage does not have that. It's a straight up 4.0 version that is just given out. Now, will they come up with an industry option just like FICO? I'm pretty sure they would, because I think that's going to be a request by some of the investors. Like, hey, that's great. I like your model, but I really care more about their ability to pay back. I agree. I wish it was like that, because I see people with mortgages all the time and they can't sell their house because maybe their auto loan, they got their car repossessed, but they've had a house for 15 years and they've never been late. And so I can't approve them because their scores are so low. Right. So hopefully it's going to be interesting how this plays out. Again, they have to get the banks and the lenders and everyone to play ball. Yeah. And they may not get everybody, they may just, hey, let's just try to get 2% of the market. Let's prove it. See what happens. But maybe there'll be some mortgage companies that are doing better financially, closing more deals, their risk is lower. Yeah. And then our score model product will speak for itself. Yeah, that's really interesting. We'll see how that plays out. It could be good, could be bad, especially for the consumer, where the only way they can get their FICO score, the FICO mortgage score, is through myfico.com, right? That's the only place to really go to get your true FICO scores. Vantage is pretty much all over. They own the online space. And so, then that's where most of their users are. It's where most of the consumers are when they check their scores. They're normally looking online. Got it. Except for they have their score to their credit card app, like Discover. Usually those are like FICO 8 scores. But, typically Credit Karma, most online players have a Vantage score. And then maybe good for the consumer, so that way they can kind of like know in advance where they are. But if they're already kind of like at a disadvantage because of the algorithm that FICO or Vantage. It's like you're checking Vantage score and then the lender uses FICO. It's like, it's going to be interesting how this plays out. We're here at the Credit Age, we're keeping a close eye on it. It's coming. It's just a matter of, when are people going to gravitate towards it and give it a shot. Nice. So what I want to talk about next is, why did you decide to become a loan officer? So it's funny. When I was a child, my dad used to take us to open houses. Like, no joke. We'd get in the car and we'd go look at houses. And when I was a kid, I was like, man, I can't. What did your dad do? My dad sells cars. Okay. Yeah, so it's in my blood, sells. Yeah. But we go to open houses. So we'd go to open houses. And I mean, my dad would take me to these really nice houses. And it just, I don't know, I for whatever reason, it worked because it inspired me. And I always thought I was going to be a real estate agent. Like, I thought I was going to be a realtor.
And I used to sell insurance before I became a lender, and I used to have to call the mortgage companies to update them with the mortgage information. Right. And one day I was like, you know what? Like, I want to see what it is to be in mortgage financing. I didn't know that I would even end up in real estate at all. And so I applied at a small mom and pop shop, and I knew instantly that that is what I wanted to do. I mean, I loved the financing. I loved figuring out a puzzle piece. Like, I just love, every scenario is different, and it's so satisfying when it's a hard scenario and you figured it out. And for me, like, why I wanted to become a loan officer is because not only do I get the fulfillment of helping someone, but it's so awesome just to be able to put like this whole scenario. I mean, everyone's financing is different. Right. There's not one that has like the same scenario. And it's satisfying to just be able to like put this puzzle piece together and get this person into a home. And so that's kind of why I decided to do it. And I love it. I love it.
Anybody that you've looked up to that's in the business, or has been like a mentor?
I mean, not necessarily. I really didn't have anyone. I would just see, like, I look up to the ones that are doing well. I'm like, I can't wait, or I want to be right there with them. And, you know, like every mortgage company has like the top 20 loan officers get to go on a vacation. Like, my goal was always to be like, oh, I want to be there, you know? So,
I mean, on any interesting vacations?
I mean, I just got back from Colorado, so that was fun. I went to Winter Park, so we went skiing, but that's what I did. It was really fun. Nice. Yeah.
So I want to talk about where the rates are right now. You know, where do you see them going? Why do you think the rates are, you know, the way they are? And, you know, when do you think is the best time to refinance your home or maybe purchase a new home? We'll get to that in just one second. But first, I want to go and invite everybody to take advantage of some freebies. Right now on our website, if you go to thecreditagents.com/links, there's some freebies that are on there. You can get a free 7-step guide to a 750 score ebook. I personally spent a lot of time putting that together. Talk about, you know, things you need to know about the credit bureaus, things that are on your credit report to look out for, how to challenge that information and get it removed. I talk about, you know, just tips and tricks on how to also boost your credit score. You can also get a free credit report consultation on the same page. So if you go to thecreditagents.com/links, you can pick from a few offers, as well as that secure credit card website I mentioned earlier. It's on that same page. You can just go to one page and get all the information you need to begin working on your credit or to schedule a complimentary credit consultation. So again, go to thecreditagents.com/links to get access to a bunch of freebies we have on that website. Really cool stuff to help you begin repairing your credit. All right, cool. So where the rates are right now.
So rates are actually really good right now. They're the lowest that they've been in the last 21 months. It's probably been 22 months because I just heard that last month, but they're really low. Like, actually my clients that I, you know, purchased through me last year are now contacting me to refinance. So right now the rates, I mean, I'm seeing rates in the 3s again, which we haven't seen in a really long time. I locked someone in the high.
They were in the 5s.
They were in the 5s. They were in the 5s. Man. Just the beginning of this year, they were in the 5s. End of last year, they were in the 5s. Recently, they've dropped down. And so right now, I mean, they're really good. They've been consistently good for about maybe over a month for sure. And I haven't seen them increase quite yet. So fingers crossed they stay very low. I mean, it's really, right now, the market's really hot, so to speak. It's right now, it is a good time to buy because obviously the lower the rate, the more purchasing power, the lower your monthly mortgage. There's so many different things that are taken into consideration with a lower rate.
Why do you think the rates are low right now?
I have no idea. I really don't know. They're really low right now.
Trump has anything to do with that?
I'm sure. I mean, I don't know. I really don't. I wish I did. I don't study on that.
Yeah. So I remember they were like 5s, I don't know, a year ago, maybe 4s and 3s. That's really unheard of.
Right.
Is that the lowest you've ever seen it?
I've only seen it be in the 3s. Yeah. Awesome. My whole career.
So where do you see them going? Do you think
I think they're going to stay low for a while. I really do. I think they'll stay low for a little while.
In your experience, when they're low, how long do you think they're normally low for?
I think they'll be low till the end of the year. Okay. I don't know where they'll be, you know, starting next year, because when they went up rather quickly.
Okay.
So
it's not even like an advanced notice. Hey, 30 days are going up.
No, it's just when the Fed meets and
wow.
Yeah.
So it could be that day. It could be that instant.
Yep.
Hey, number 3.
I mean, it happened the last time. Right now when the rates were in the 5s. I mean, last year I was locking people in the 5s. Yeah. And I mean, it went up so quickly. Yeah. So quickly.
So it must be the best time right now, obviously. To refinance.
It's really good to refinance.
What do you need to refinance? Like how does that?
So it's almost like a purchase, but obviously a refinance. Yeah. You need your driver's license and your social security card. Okay. The most recent 5 pay stubs if you're W-2, and then the last 2 years of tax returns with corresponding W-2. Also, I mean, if you want to refinance, they'll want to see like your most recent mortgage statement. Okay. Most people think when you refinance, it actually consists of bringing money to the table, but it doesn't. You roll the closing cost into the loan amount, which isn't very much. I
thought you did.
No, you don't. So, I mean, when you roll the closing cost into the loan, people are thinking it's going to be $10,000. No, it's only like a couple $1,000s. You're only paying like the title fees. And the really cool thing about refinancing too right now is that if you had an escrow account set up when you originally purchased that house, they will actually give that back to you. You'll get a check in the mail from the escrow because you start it when you refinance. Yeah. So not only will you get your escrow money back,
or something.
You'll get your escrow money back. And you'll also get to skip a month of mortgage. So, I mean, right now, take advantage of it. The rates are low. Skip a month of mortgage and get an escrow back.
If you're wondering about Christmas money,
yeah,
there you is.
No, seriously.
There's Christmas money right there. Where Christmas is right around the corner there. So, in terms of, let's say someone purchased, was the rates in the 5s last year? Mm-hmm. Okay, so someone, let's say, bought the house a year ago. Mm-hmm. Would they be eligible for a refi?
Mm-hmm. They would.
Okay.
They'll have equity because not only did they bring their down payment to the table, so there was already that small equity, but they'll also have equity from all the months that they've already paid on their mortgage. Yeah. And then if their house is worth more than when they purchased it, which most cases it is. Yeah. So, I mean, I'm helping someone right now with a refinance. They just bought a house from me 7 months ago. He did a 30-year term. He got maybe a mid 4, higher 4s.
Okay.
Now he's actually going to do a 20-year term. His mortgage is less than the 30-year term. Nice. And his interest rate's in the 3s now.
No brainer.
No brainer. He's
going to pay off his house faster.
Skip a month of mortgage. Doesn't have to bring anything to the table. He's just going to roll it into the loan amount.
Nice.
So
now is probably the best time to refi.
It definitely is. Definitely is. Or if you're in the 5s. I mean, if your rate is more than a 4.5%, I think that you should definitely just look into it.
Which could be a lot because 3s. I think the last time I heard a 3, I want to say it was 2008, 2009. Yeah. Right after the recession.
Mm-hmm.
Trying to
right after the recession.
Like, hey, we'll lower the rates, get in, but no one could qualify. No one know the market was really stagnant. So as far as documentation and let's just say kind of stay on the refi for a little bit. Okay. Score wise, what kind of score do you?
That's always like such a large question because people ask me what kind of score do I have? It's kind of, yes, I would say you absolutely want to be in the 600s, but like I always say just apply because I've had people in the 550s that didn't even know that rapid rescore could get them into the 700s. Like I do it all the time. So I'm like, well, I first screen the client. What all do you have on your credit? Do you have maxed out credit cards? Do you have a bunch of collections or do you have a combination of both? If they're like, oh, I have nothing but collections and only one credit card, well, then that's when I know more than likely I just need to refer them out to you because I can't play around with collections. Right. You can, I can't. But if it's like I have maxed out credit cards and I have like XYZ and whatever, then I'm like, okay, I think it's best that you try rapid rescore. So if you are trying to refinance, I would say just reach out to me because that way everyone's situation is different. I mean, rapid rescore might help, but yeah, you want to have a 600 for a refinance.
So basically guys, if you are, mid to high 4s or higher than that, and you want to refinance or you're concerned about your credit, maybe you think it's a little weak, the best thing to do is just to reach out to you and discuss the situation kind of open book wise, and you'll be willing to kind of guide someone through that and see what you can do.
Right, and I mean that's also like another reason why I started my business relationship with you is because I had so many clients that needed like credit repair, you're not going to call me and I'm going to be like, oh, you don't qualify. It's like, hey, you don't qualify. I can either one, do rapid rescore and you're good with me, or two, I refer them to you. And it's better to have them referred to you, because when you're done fixing their credit, you're, hey, Samantha, I'm done. These people aren't just calling someone and like, I can't help you. They don't know where to start. If they can't start with me, I refer them to you. So
and I think that's a good point, because kind of going back to our topic earlier about what makes a loan officer great, being a servicer first, being a servant first, thing is, I can't tell you how many other loan officers have referred to us in the past. We'll do our thing. Okay, great. Let's get you back to so-and-so. Oh, I don't want to work with so-and-so. They were kind of rude to me.
And they do that. I hear that all the time. I hear loan officers, like, they don't even want to invest the time on someone that needs the assistance. And it's like, they need help too. And so
pipeline. Gotta have a pipeline. You gotta manage your pipeline. You gotta know where your business at. What about on the purchase side? What kind of documentation you need for a purchase?
Same thing. It's obviously, you're not going to need your mortgage statement. You're going to need purchase, driver's license, social security card. If you misplace your social security card, it's okay. Most recent 5 pay stubs and 2 years of tax returns. Obviously, if you don't have like a savings, so to speak, there's programs that can help you get into the house. There's ways where the agent can negotiate the sellers to pay for your closing costs. Most people, it's so crazy. People think you need 20% down. People think you need $20,000. I just closed someone last month and I posted it on Facebook. He brought $3,000 to the table. He gets to skip every time you purchase a house, it takes 30 days to get to the finish line. So let's say, for instance, you went under contract today. I'd close you end of September. Your first mortgage is always free. So October is free. You don't pay until November. So that 1 month of not having a mortgage, even if you
or paying rent,
or rent, it really helps. Like, you think bringing $3,000 to the table is a lot. No, you'll get it right back the next month, because you don't have any bills, no mortgage, no rent. So
it seems like now is the best time to do it.
It really is.
A month, got holidays approaching. Rates are not going to be this way forever.
Get into a home by Christmas.
Yeah, there you go.
There's your Christmas present.
It's going to go up, January of next year.
Right. Who knows?
So this is probably the best time. If there was never a greater time, this is probably it right now. So tell the folks how they can get in contact with you.
You can find me on Instagram at Lady Lender. You can call me 281-974-8181. Or you can find me on Facebook, Samantha Cavazos.
They can see all the stories.
They can see everything. They can find my contact information. My website is on all my social media. If you are trying to find me, just Google Samantha Cavazos network funding. You'll find my website. You can apply online. And
Awesome. Well, Samantha, thanks for dropping by. Thanks for coming in. Always a pleasure seeing you and sharing your
absolutely
knowledge that you have.
Yes, so, thank you for having me.
We'll see you guys on the next episode.
Awesome.